All right, so where's everybody from? Hi, Mark. Belgium, nice. No, Bermuda. Oh, that's got to be tough. Houston, my old stomping grounds. I kind of grew up in the League City, Clear Lake area. Belgium also. Toronto, Switzerland. Gosh, where are all the Americans? Good old Norcross. Hey, Peter. Right down the street. All right, that's great. Now I've got another question for you. Why are you here today? Oh, I'll be in SoCal next week. Why are you here today? See to make some cash. What's going to make you think that you've seen that? Yeah, Max, I saw when I saw that you're from Belgium, I thought that might be you. Well, I'm glad you're all here today. We had an event on Thursday that I hope that you all got to either attend or watch the replay. If you didn't, I'm going to scan over just a couple of the items that we went over on on Thursday, and then I'll go into more different things today also. So it's not just a rerun. Um, so this 80% thing that we talked about, that you see here, and that we were talking about on Thursday, um, when we poll our traders that have been doing this for a while and that we know they've been following the program that we have set up for people to practice um, and learn our trading system. And we poll them to see how they're doing. Generally, we get an answer of somewhere between 75 and 85% winning trades is what they've managed to achieve. And this has been over a long period of time. That's about the average of the people that we know have been doing this for some time. Okay, so that's where this whole 80% thing came from, and and so we know it's attainable because people are telling us that it is. You could come and ask me, Mark. You could say, "I want to come and see how to make some cash," and you could say, "Well, Tony, what's uh, your winning percentage?" And I could tell you, but really, what would that matter? It's really more important to poll people that have done it, to ask people that have been where you are, or which I have, but of course I'm the guy here on the microphone. I'm the guy that's been trading this system for many, many years. I'm the guy that created this system. I'm the guy that created all the indicators. So naturally, you would expect I would be doing better than almost anybody. Um, what you want to do is find out from the people that are actually doing it. Ask those people. That's going to be a better way for you to get a handle on whether this is something that you can do, and is it worth doing. That I asked my neighbor. I don't ask the air conditioner guy if he's a good air conditioner guy and should I hire him. Of course, he's going to say yes, I'm the best, and you should hire me. I'm going to go ask my neighbor. Okay. The ratio average win to average loss with this system. Okay, well, this is not an auto trader, Max. The system doesn't have a ratio. Well, this is a system that is discretionarily traded by traders. So that's very difficult to say. I couldn't answer that. I don't know them personally. I don't know how hard people are willing to work at this. You know, I could spew out a bunch of statistics based on people that don't do hard work, based on the people that think that this is an auto trader or that the computer should do all the work for you. It deep paint. I don't know what that means. I tell you what, I'm going to let Connor and Praveen answer questions in the chat. And I'm going to cover up the chat because I can certainly get drawn off of the presentation by questions about average wins and things like that. I will, though. You can ask those questions in the chat, and Connor and Praveen will be happy to answer those for you. If you have specific questions for me, just hang on, and I'll be happy to answer all of those questions. But let me do it at the end. Let me go ahead and get through the presentation first, okay? Again, feel free to ask, and if you want to ask some of our other traders that are here what they think and ask them if they want to answer, that's fine, and let them answer in the chat. So I'm just going to keep moving forward. I'm going to cover up the chat so that I don't see any of the questions because I can certainly get distracted by that. And I'll move forward. All right, so one thing that's really important. I am not telling you that you can, without a doubt, trade our system or any other system profitably. What I'm saying is that the potential is there. It's a trading, and I've got to make sure we have this disclaimer, particularly for this type of event where I'm claiming that traders are reporting back to me that they're averaging, that the ones that have been working at it are averaging about 80% winners. Okay? Trading's a great way to lose a lot of money. Don't do it with real money until you've mastered it in practice sessions. Even then, only do it with money you can afford to lose. If you don't have the time to do it right, don't trade. Don't even try. And I can tell you right now, trading takes time. All right? And it takes effort. So on Thursday, we asked a number of questions that we know that you guys have, and we answered those questions. So if you want to, if you see some questions up there that you want the answers to, either ask me later or go to the video for Thursday. If you haven't had a chance to watch it, there's a link to the video right there for Thursday. So the big question is this something that someone like you can learn? Okay, this trading that we do. So what I've been trying to get across to you is that we can make things as simple as possible. But you've got to be willing to work at it. Now, we've developed programs to help you working at your trading, to help you gain experience and do it in the most efficient way and the fastest way. Think about anything that you've ever become really good at. Maybe it's a sport. Let's just say golf. And you know that it's going to require that you go out to the driving range or to the putting greens or whatever and hit ball after ball after ball after ball after ball until you get really, really good. Okay? This is how we learn things. This is how we get really good. And we have programs to help you do that. Okay, so what am I talking about here? We went over this Thursday, but it's worth going over again because honestly, this is all we do. This is all we do, and it's not rocket science. Okay, we have a trade setup. We've up until recently we call it the speed flash. So we're looking for a few things. This is a step-by-step qualifying trade setup. Okay, what do I mean by that? I mean by when step 1 is in place, we go look at for step 2. Okay, so it's an easy qualifying process. It's not trying to throw a whole bunch of things in the pot and make something happen. Okay, it's a step-by-step, very simple, very straightforward process for qualifying a trade. You probably have been trading for a while or struggling for a while or whatever, and you've come across these trading systems where there's a lot of shades of gray. These types of trading systems are pretty easy to design. It's a lot harder to design a step-by-step, very simple system. Okay, first thing we're going to look for is some momentum. That's what you see here on these black bars, or this black bar, and then we're getting lighter gray. You can also see that over here. We see the black bar, it gets lighter gray, then it turns even a lighter color, like a white or lighter gray, and then it turns white. The lighter the bar gets, the more imminent exhaustion. Okay, so we're reading momentum because with strong momentum, exhaustion is imminent. Okay, we're looking for an overbought or an oversold condition. Here we have an oversold condition. That's what this blue outline. I'm going to show you this later. I'm going to show you how and why this works. Okay, so I'm getting right to the meat of the stuff here, and then we're going to back up a little bit in a few minutes, and I'm going to show you all why this works and what it is exactly that we're doing. Okay, but first I wanted to show you the setup so you'd understand. All right, number 3, we have a speed tick. That's this little tiny little arrow right here. There's an awful lot of information being generated and being read. Every single tick inside this bar is being read, and as soon as a condition exists where we believe that this bar is being manipulated by the market makers, we print this right here. That's a huge source of information for us, and I'll go over that in a little bit too. We've got an area of support. Just in case the trade goes against us, we want to have some support behind us. We have our flash, which is a signal for divergence, saying that even though we have price dropping, momentum's already changed directions. So that means that momentum and price are not in agreement with each other. And when that happens, momentum will almost, price will almost always follow momentum. Okay? We have another similar trade setup called a Rico dot, where we get an oversold condition or overbought. It works either way. We have a ricochet, which is very similar to, in fact, we use the same histogram as the speed tick, but this is a rapid rate of acceleration of orders that are being processed through the exchanges. Not orders placed, but orders that actually get traded. Okay, so very, very big difference. The term orders is kind of vague. We all have kind of gotten used to thinking of it one way, but orders can be something that are placed and removed without ever being filled. So these are filled orders that are processed, okay? And they happen very quickly, and so they've accelerated very quickly from the previous bars on the histogram. I'm going to show you that histogram also. Then we've got our pullback alert, which is suggesting that inside this bar, there was a lot of selling going on, and then it got a certain point that the buyers kicked in. And then there's a whole bunch of buying and selling going on. When that happens and there's weakness, it's very common to see the buyers take control from the sellers because the sellers are exhausted. All right? And then again, we have our support just in case the trade goes against us. This one's a really nice, anybody that trades with us in the trade room or trades this system, you see this and you just start salivating because you know this is as good as it gets. We see this strong momentum here. These bars turning black and then a lighter gray and then an even lighter gray. The lighter the bar, the more imminent the exhaustion. Look how straight up price is running here. And it ran up here and it slammed into this line of resistance and paused. Okay? During the course of this bar, and I'm going to show you this on video. So I know you guys you get excited. Well, show me. You'll see this on video and you'll see how this happens. During the course of this bar, it likely started out as just a regular bar like this as far as the outline just being black. At some point during the life of this bar, the outline turned this pink color because it got overbought. Okay, so in real time it turned pink. So we knew we were in an overbought condition. Why do we want to know that? Because that's where exhaustion is beginning to set in. Okay, so we've got an overbought condition. So we have strong momentum. We have an overbought condition. We have that ricochet, which is telling us that the acceleration of orders being processed beyond these bars here, the acceleration is way beyond the orders that were coming in for this for those bars. So again, we've got our pullback alert talking about that we had a lot of buyers at the beginning of this bar. Somewhere up in here, those buyers and sellers began to fight with each other. We have a major resistance to kind of help us in the event that trade wants to go against us. We have that speed tick suggestion the bar is being manipulated. There's no way retail traders can trade this fast. So we're reading that, and when we get beyond the speed of orders coming through being processed is beyond what retail traders can do, then we're going to generate this signal. We don't have the tools that the market manipulators have, that the market makers have. We don't have the ability to use supercomputers. We don't have the money to put these supercomputers inside or very near the exchanges. We don't have the ability to trade in milliseconds like they do. But because they do that and they have those opportunities, they leave footprints in the sand. When we see those footprints, we're going to print this right here. Okay? Then we have a flash. This is our divergence signal, suggesting that, oh, look, price is doing this, but momentum has shifted, folks. And when that happens, the price is going to try to follow the momentum, which is headed down. Okay? So that's why we print the flash up here. We expect price to drop. All right, more of the same. Momentum, overbought, ricochet, pullback alert, resistance, speed tick, the flash, or McDiver. These are both divergent, two different divergent signals. That's as tough as it gets. Okay, that's as hard as this gets. That's all I look at when I trade. I don't look at other time frames. I don't look at other chart types. Now, for me, this looks very simple. For some of you, you might think, oh man, there's just too much going on. There's these indicators. I don't know what they mean. I don't know what to make of them. I don't know the right combination of indicators. That's too much for me. Okay, I just want something more simple. Well, truth be told, there can't be anything more simple. But stay tuned. I have something for you. I've managed to make it even easier for you. But first, let's talk about some things. Let's back up a little bit And I'll show you why I came up with this type of trading system. When I was trying to trend trade, I was my gut just couldn't handle it. I might come in and into a trade, and I might short it like somewhere in here because that's what I thought I was supposed to do in whatever trading system I was trying. I was trying these trend trading systems because that's what I believed that I was supposed to do, because that's what I kept reading in forums, and that's what I kept hearing in webinars and videos on YouTube. I kept seeing all these things. Oh, you got to be a trend trader, got to trend trade, got to trend trade. Counter trend trading is just dumb. So I believe all that. And so I kept trying, and I didn't have much money. I kept trying to do it with, single lots, but being a trend trader. So let's say this is a breakout of some sort, and I decided to short it somewhere in there. And my intention was to write it down to the target down here. All right. So ultimately, we see that this worked out, right? And in hindsight, you look at this and you go, oh, if I shorted it here and I sold it down here, or I hit the target down here, I did really good. But in reality, what happens? First of all, you shorted it here and price goes straight up. And you're about to get stopped out. But you're supposed to hang in there, right? Because that's what your trading system says you're supposed to do. You're not supposed to just sit there. It's supposed to go straight to target. But you've got your first gut check. It's going against you. What do I do? What do I do? I've lost a bunch of money already. Do I just wait to lose more? So what do? You get out, or you don't, or you hang in there. But there's a gut check there. Okay, so maybe you hung in there. And now, after just being panicked from potentially losing a bunch of money, now you're starting to get ahead. Oh man, if I just got out now, I could make some money. No. Supposed to stay in it. Supposed to ride it out all the way to the target. I wonder if I should just take some money. No, I'll stay in. And then, of course, what happens next? Another gut check, right? Now you're losing money again. This goes on and on and on and on throughout the life of a trend trade, particularly for people like me who had no money to speak of. I was a single contract trader. Oh man, I'd really be gambling if I went with 3 contracts. But there's something that nobody ever told me. It took me years of struggling to figure this out. Finally had a guy that I had been in his trade room for 6 months, and he kept telling me I was doing things wrong. He kept, he could never lose and I could never win. Of course, all the other people in the trade room seemed to always win, and I just couldn't get it. And so I decided I was going to have a conversation with this guy. And after talking to him for a while, I got him to admit to me that it was highly unlikely I would ever be successful trading single contracts this way. And I started thinking about that. And the statistics are proven that if you're trying to manage your emotions, all these gut checks, chances are you're not going to be able to. So we know the statistics that 90-some-odd% of the people that try trading fail at trading, and I don't know that to be true, but I suspect it is because of the unfortunate circumstance that we're all humans and we all have feelings and emotions. So I decided I'm no good at this feelings and emotions management. I needed something that I just couldn't manage it. So I'm looking for something that was no stress. Well, how could I have no stress and be a trader? Well, the only time I ever didn't feel stressed with trading was when I didn't have any money in the markets. Now, I might feel stressed because I just lost a bunch of money, or that I felt like I needed um, to act like a trader and just put on trades. You know, I had to convince my wife that I was a trader, and therefore traders. You know, I I came from a construction background. I'm a contractor, and sitting around is not something that you do when you're working. Sitting and staring and waiting is not working. And that was kind of my mentality. So I always felt like I had to throw a trade on because then I'm working. Then I'm doing something. You know, I'm doing something instead of just sitting there. Well, that didn't work out too well. So instead, I started looking for some way to get in and out of the markets as quickly as possible with very little stress and a high probability of a positive outcome. That was the key. Not make a lot of cash. The key was trying to get in and out of the market with a positive outcome as quickly as possible. Now, can I do that? When I say quickly, I mean I'm looking for 5 ticks. That's it. 5 ticks per trade. And I'll show you why here in a minute. But most people aren't interested in just 5 ticks because we've all been brainwashed to believe you've got to ride a trend to make any money. Well, you certainly do if you're a single lot trader and you've got to get 30, 50 ticks before you're going to make any money. But what if you decide you wanted to make a regular income? You got really good at doing something really simple, and you just do that really simple thing over and over and over again. Can you make money? I don't know. How much do you need to make? So you need a plan. So here's your plan. All right, here's the plan we teach in our mentoring program. First thing you want to do is learn the system only by sim trading. There is no reason in the world you should be out there trading with real money until you've mastered and understand completely the trading system that you're trading. It blows my mind what I used to do and what I know a lot of people do. They learn the bare minimum and then they hope. They start trading live and they hope they've learned enough or they're experienced enough to be profitable. So once you learn it, then you practice it. Okay? As I mentioned, we have programs for this. Practicing your trading is not showing up in the morning, trading in sim, like a lot of you do, a lot of us do. I trade in sim every day, but I also trade live. I trade live until I hit my target for the day, and then I switch to finish the trading day in sim. Sometimes that takes 10, 15 minutes. Sometimes I go the whole day and I don't hit my target. Just depends on what the markets offer. But that's not practice. That's game time. Okay? You don't practice in game time. So we have a program where you can practice late at night whenever you can do it. A lot of us have jobs, So we designed this program so that you could do it. You could practice your trading after you get home. You have dinner, you spend family time, and then you have your 2 hours at night before you go to bed. You could practice, and it's just like being live. So we have a way that you can do that. So this practice develops confidence. Confidence develops consistency. What do we call this? This is called experience. Now, when you've proven to yourself that you can grow a sim trading account, when you can grow the sim trading account, begin live trading with a single contract. With our system, you can absolutely do that. You don't have to trade with multiple contracts in order to make any money, like in some of the trend trading type of scenarios. The reason why you have to have multiple contracts in trend trading is because you have to scale. That's how you make money in trend trading, is you have to scale. Every time you have one of those gut checks, you can scale. All right? So that's the only way to do it. So you begin trading live with a single contract, and you very patiently gain experience. You're trading live in the morning. You're practicing in the afternoon and evenings. You're going to grow your trading account, let's say 2,500. You might decide 5,000 or something. But you're going to grow it. You're not going to add money to it. You're going to grow it with your trading. So now you have a goal to grow the account a little at a time. Your goal is not to try to make a living at trading or make a lot of money. Your goal is to grow your trading account by following the rules of the trade plan. When you've grown it, you add another contract to your trading and keep doing the exact same thing. Grow it to the next level, add another contract. And keep doing that. That's a plan. That's a workable plan. And you're doing something very small. You're doing it over and over and over again. You're reducing your exposure by being out of the market most of the time. So it's much less stressful, much less emotional. This is no different than becoming successful at anything else. It's small steps. Practice what you learn, gain experience, continue practicing and gaining experience forever. This sounds like, oh, this is going to take me too long. I want something faster and easier. I did that for 7 years, looking for the fast, easy way. It's amazing to me to see how many people can become successful and get so much better at their trading simply by taking the time to work at their trading the right way. It seems very slow and it feels very tedious and it's not a lot of fun, but it's the fastest way to get good at anything. Okay? So, okay, maybe you're interested. How does this work? You gotta keep it simple. You know how easy, you all know how easy it is to make trading complicated. It can get complicated in a heartbeat, right? So let's see, what is simple? All we're gonna do is we're gonna measure order flow and anticipate exhaustion. You look at any trend, you will see pushes and pullbacks, pushes and pullbacks. Why do we see the pullbacks? Because during the push, we have what we call exhaustion. Exhaustion is those places where those trend traders are now scaling. They're either bailing out of their trades because it's going against them, or they're taking profits. But price at that level has become exhausted, and it's going to pull back for a period of time until they're ready to do it again. That's as simple as it needs to get. All right, or as complicated as it needs to get. So if you can answer this question, you've got a really good chance of being a successful trader. We asked this on Thursday. So you look at these two guys, and the simple question is, who is most likely to stop first? Well, when you look at this, everybody knows. It's obvious who's going to stop first. Why? Because that sprinter is rapidly expending his resources. Here's what it looks like on a trading chart, and this is very typical of how the markets move and how the market makers are manipulating the market. You've got an area down here where the marathoner is running of accumulation, where the market makers are buying up all of the available assets that they can get their hands on at a very low price. Okay, then they manipulate the markets. I go into a lot more detail on, we have another webinar on this. If you want to know more about how market manipulators manipulate the markets, I use this chart, but in fact, I do a whole webinar on just this chart. So send us an email down here if you'd like to see that. We'll send you a link. But essentially, the market makers manipulate price because they want to run it up now, right? Because they bought a whole bunch down here. They want to run it up on relatively low volume. Every time they run it up, price is going to drift back a little bit because they're manipulating this to get people to react up here, right? They're either getting stopped out or they're taking profits. And when that happens, price drops and then off it goes again. Okay, they manipulate it again. Oh boy, stopped out, taking profits. Price drops back down here again. This is where the market makers make all their money, right here. They'll start selling in here, but they're pretty smart. They still control the majority of the assets for this instrument. They manipulate it one more time. Buyers and sellers are real busy up in here, or sellers mostly, and then down it goes. Okay, that's what's happening. Now, how do we measure flow? Of course, we're reading tape reading. You know, the old tape reading. We don't have tape reading so much anymore, but we have what we call the tape, and that is the time and sales, where we can actually see the actual orders that have been processed through the exchange. Okay, these are not level 2 orders where people put them on and take them off, put them on, take them off, and you can read the level 2 stuff. There's a lot of games that get played in the level 2 stuff. We were noticing that particularly last week when the markets were just going crazy, and or week before last. And so somebody in the trade room mentioned it, and so we all looked at our domes, trading domes, and noticed the games that were being played with these huge blocks of orders that were being put on and taken off way before they actually got filled. So there's a lot of games going on, but using time and sales, it's taking the real information. Now, I noticed that, and I noticed that when the orders were being processed at a particular rate, price seemed to stop and turn. So I had a programmer build me this histogram here. And I figured out, looking at this histogram, I could figure out that when price exceeded a certain level of the rate at which the orders were coming in. Now, the easy way to think about this is a speedometer. Okay, this is just a speedometer. If it exceeds this speed, and let's say it's 100 miles an hour, make it simple, then there's a real good chance that price is going to stop and turn because this bar was manipulated. Retail traders can't trade up in this area, this speed, because we don't have the resources that the market makers do. You know, the HFTs and the quants and the hedge funds and all that, those guys. So I created this and figured out that that's a footprint. Okay. Now, another way of reading flow. I showed you those dots. Remember those dots I showed you on the when I was going over the trade setups on the and you see the dot on the chart. That was telling us that there's something going on inside the bar. So what are we looking at? These are two identical bars here. If you looked at a static trading chart, these would look exactly the same. This bar, pretty much nothing really happened in relation to volume other than a lot of buying volume. Opens and closes with buying volume. This bar, on the other hand, had a lot of buying volume and then all of a sudden a lot of selling volume, a lot of activity going on. This type of information is very important because when we hit a level where the sellers are just sitting and waiting, and then a lot of times this is the electronic traders, you know, the guys using the supercomputers, are sitting up here in this level and they just wait for price to get here and they start firing off all their sales. Well, the buyers really didn't know this was going to happen, and there's a whole lot of activity going on here and they're fighting, and the sellers have just been sitting up here waiting while the buyers are actively buying. So what's happened? Exhaustion. All right. Another way of reading exhaustion, when price gets overbought or oversold, we look at a momentum oscillator. This is an RSI, and whenever the oscillator exceeds the extremes, you'll notice that price starts getting exhausted and wants to pull back. Look at it, put an RSI on any chart, and you'll see that. So this is really good information for developing a strategy for implementing exhaustion. However, I didn't want to have that oscillator on there just to show me when price was exhausted, so I just removed the oscillator, and now I just paint the bars to show me when they're overbought or oversold. So it's right where my eyeballs are looking. I don't have to confirm the potential for a trade setup by looking away at something else. Everything we do is right in front of us. Okay? So we've got the potential for exhaustion is very important to this whole system. All right? Now, another great way, the best way. I showed you those little lightning bolts, the flash. Divergence is, to me, probably one of the strongest, if not the strongest, analysis in trading as far as knowing what's likely to happen next. It's almost like a crystal ball. And you spend any time with our divergence indicators, you'll start to feel that way over time. All we're doing is measuring price against momentum. And most of the time, when price is running and momentum are running together, this is the most natural way for the markets to move. Okay? Price and momentum are in agreement with each other. And that's very typical. It becomes atypical when price and momentum do not agree with each other. This is a divergent condition. They're diverging. They're going in opposite directions. When that happens, price will almost always follow momentum. Now, if it's that powerful, why don't more people use divergence in their trading? Well, this is typically how you're going to find divergence. This is a very typical divergence indicator. Kind of hard to read. Kind of hard to understand what it's telling you. So a lot of people kind of give up because they miss it a lot. They miss trades a lot because they're looking for divergence, and a lot of times you see it in hindsight. A lot of these lines print backwards, and you miss it, and they print 3 bars later. You know, somewhere over here, this line prints backwards like this, and so you kind of missed it. We have decided instead, let's put it right on the bars where our eyeballs are looking, and let's just get rid of all of those lines. Let's say, yes, right here we have a divergent condition. Yes, right there. Right? So we're alerting you to a condition. Does that mean take a trade? No. It says a condition exists that is conducive to exhaustion. It is conducive to price wanting to go the other way, or ultimately going the other way, or high probability. Doesn't mean take a trade. Right? We have specific rules for that. We have specific setups. We have a step-by-step process for that. All right, so remember this? For those of you that thought, oh, well, this is just too much. This step-by-step simple process is probably more than I want to spend time on. We've made it even easier. We've combined flow and exhaustion into a single indicator. So instead of having just our flow indicators and then our exhaustion indicators, we've combined them into a single indicator that we call the Rockstar. The Rockstar is taking our OBOS, or our overbought indicator, overbought, oversold. It's taking our divergence indicators, and it's taking our speed tick indicator, and combines them to tell you when a confluence of conditions exists and will generate a signal. Everybody understand that? I'm not reading the chat here. All right. So you want to see what this looks like, right? Let's do a couple. I'm going to show you a couple of different videos here. Oh, QuickTime crashed. Hold on a second. My video player crashed for some reason. Let's try that again. Oh, that's not it. I like using QuickTime instead of the Windows player because QuickTime gives you the ability to, this is called scrubbing, when I drag, and you can drag it like 1 bar at a time. So this is much better. Okay, so we've got 3 identical charts here if you're sitting and staring at your charts. Got 3 identical charts here, and on the left here we have nothing. In the middle here we have our regular indicators that I was telling you about earlier. And then on the right here we have the Rockstar, which is a combination of all of these indicators right here. So at the open of this bar, you would put a trade on here, according to this. I mean, if that fits your rules, okay? If that fits your rules. And of course, we don't have everything on here. But this is what I'm showing you is the confluence of events. Confluence of events generates the Rockstar. Okay, so if you find this information You know, a lot of people like lots of information and like to know better what's going on. You know, like to know the inner workings of how a car works and things like that. And then a lot of people say, no, just give me keys and I'm good. Just give me car keys and that's all I need. Okay, so this is for the people that want to know the inner workings of the car. This is for the people that just want the car keys. Now, just because we have certain indicators here doesn't mean we're going to generate a rock star. We need a confluence of indicators. See, we had indicators here, but we didn't have any divergence on this bar. No divergence. So no rock star over here. So we have, you see, we have the speed tick, and there's a divergence signal up here. That's that 1D. It's way up here. You can hardly see it. That's what created that rock star. We have a speed tick here, overbought condition, divergence here, rock star here. All right, so there's the difference. Now let's look at. Sorry, this one also crashed. Let's look at yesterday. This is our trade room. Which, by the way, if you want to come hang out to our trade room, it's on the website. You can sign up for a free trade room trial. I will give you the link to that also, tell you how to find it. Now, I made this morning. This was yesterday's trading. So I'll apologize in advance if some things are kind of screwy or out of order. It'll zoom in when there's something that is of interest. Now, again, just because we have indicators on the charts, you see lots of indicators here? Indicators are not order generators or signal generators telling you to take a trade. There needs to be a certain confluence of events that you design your trade plan around. And I have a trade plan. A lot of people like to adopt mine and then kind of change theirs over time. In the trade room, we're just a big group of traders, and I happen to be the guy on the microphone. And Connor also is on the microphone. And but we're all trading together, and we all have a little bit different trading style and different parameters, but we all trade the same thing. We all trade within the same rules. Just like being a driver, you know, we all learn driving the same way, but then we all kind of develop our own style of driving. Okay, same type of thing. Now this is coming up on the open of. We just had the open of the energies right here at 9 a.m. So even though you see a lot of rock stars, a lot of signals, we weren't trading this because this is during the open. Okay, but let's watch this. And this is yesterday. So everything I showed you on that little chart that showed those setups, those aren't cherry-picked setups for you to just, you know, get real excited about what we're doing. This is yesterday. All right, notice the momentum. Look at the black bars I told you about. Look at the over. I'm sorry, but this is blurry too. That's because we save every single day of every single trade room, and cutting the resolution down a little bit saves huge on file size. So we have the blue outline. So that's oversold, which means there's a potential for exhaustion, which means there's weakness in the market right there. Next bar opens. We put on our buy order at the open of the next bar. Right there. If this open backs up, you know, sometimes it opens and drops, right? I would have put on order in at the lowest price I can get it right after the open. Okay, and that's just practice. Okay, so there's our buy order. Okay, so what else we got? Is that the same one? Yeah. All right, so yeah, like I said, I apologize if this is jumping around. I just did it real quick this morning. Here's one. Not necessarily one I would trade, but look at the confluence of these events right here. And look how we got this 25 tick bounce and how we saw it before it actually did it. So I just thought I'd point that out. It's not that I would necessarily personally trade that, but the opportunities are there. Let me drag through this and see the next one. Oh, there was one up there I didn't zoom in on. I think we traded that one yesterday. All right. Remember the ricochet? Tells us when we have that sudden acceleration. Doesn't have to be a speed tick. See, a speed tick says we reached 100 miles an hour, right? The ricochet may say we went from 0 to 60 in, nothing flat. It may not get to 100 miles an hour, but it shows a rapid acceleration. Put on a rock star. We call that a naked rock star because there's no support behind it. Adding support behind your trade adds a level of risk tolerance level. If you want to be a little bit less risky, a little bit more conservative, add some support. We have traders that are not as conservative and don't worry about support because these work out so often. So, and these little, if you see these little lines right here, these are just little helper markers to show us where our open, target, and stop is. So don't really worry about these. That's just what we use in the trade room. So the order got put on here, or maybe even a little bit better. So we're showing a strong push. We're oversold. Open of the bar after the speed tick. We got the rock star. While we were trading that other one, this one was also going on. Some people trade, and they're down here. One was here, one was right here. I like to show you this on video because you can't see how price really acts on static charts. If you go to a webinar and a guy is scrolling around on static charts, you can make those look pretty much any way you want. Your mind fills in the gaps. You make assumptions about how price moves, but you don't know unless you watch it live. Isn't it interesting that you can watch either webinars or videos or people talking about trading, or even go look at your own charts when you think you're working at trading and basically you're just swapping out indicators and you're just looking for things that look compelling and interesting, and you can convince yourself, oh, this looks really good. Oh, that would have won there. I would have won. Oh, I would have won there. Oh, this looks really good. And you put it on and try to trade it, and it doesn't work. It doesn't work anything like what it looked like on static charts. I did that forever. It took me a long time to figure out that you can't look at static charts and make these kind of decisions. You've got to see it on dynamic charts that are actually moving. Notice when things print. This speed tick printed on this bar, not repainting, not several bars later, not at the end of the bar. This printed as soon as momentum became obvious. Of course, these reprinted because you don't have momentum here. When momentum starts, you don't know it's momentum until you've experienced momentum. So once we've experienced this strong momentum, we go back and paint the other bars so that your trade decision is easier. We don't make a trade decision. This isn't after the fact. This is as soon as momentum is detected, we go back and repaint where all of the bars that included that momentum. Okay? That's the only repainting that we do because it's done before the trade decision needs to be made. Again, there's our rock star, which is saying we have a strong move this way in price, but real strong chance price is going to turn and go the other way. All right, and there's just more and more of these. I'm scrolling really fast. I'm probably skipping some. If I guess I could post this up, and Connor could probably give you a link to it. There's another one. Okay, this is just yesterday in our trade room. This is pretty typical. I'll blow my own horn here. This is in the trade room, and Eric's one of our VIPs. And with the VIP sessions he's talking about are our weekly mentoring sessions called the AHA moments. And these are AHAs that I had when I figured out how to turn my trading around. And so I have these weekly group mentoring sessions where I talk about these AHAs. And just thought I'd throw that in there for you guys. That was an unsolicited comment, and I appreciate that. Okay, so bunt trading is very specific. People like to call us scalpers, and that's fine. I don't really care. I don't think of myself as a scalper. We know exactly what we're doing. We know exactly why we are doing it. We know what to expect. We don't care about the unexpected. And here's the most important one. Hope is never part of our trade plan. I never put on a trade and hope that I did the right thing and hope that the trade goes in my favor. Never. Because I don't care about that particular trade because I already have proven, as well as many other people have proven, that we have an edge. And you don't have to hope that over time that edge is going to play out, because it always has and it always will. Okay? So hope is not part of our trade plan. You may come into the trade room and I may call out a trade before I get in it. And then I tell you, okay, I put on a trade, I bought that setup. And while I'm waiting for it, I go and I'll talk about something else, you know? And we may be talking about the Olympics or who knows what. And we just keep on the conversation about whatever we were talking about, and then whatever is going to happen is going to happen. Now, if I'm going to manage that trade, then I'll start talking about how I'm managing that trade. But I'm looking for a specific thing, very specific. Get a lot of questions about, why do you leave money on the table? Why do you only go for 5 ticks? So you got to think about this. We have a trend here, right? See this downward trend? Well, the expectation and assumption is, by almost all people that trade, is that the trend is going to continue. Right? That's the assumption and expectations. And it continues more times than it doesn't. It's also my assumption and expectation that it's going to continue. So why would I expect a big bounce here, or even potentially a reversal? I really don't. I expect it to do this. I expect it to come in and bounce, boing, and come in, continue the trend, bounce, boing, come in, bounce, boing. This is what I'm expecting. Doesn't always happen. Eventually it goes bounce and it takes off and goes the other way, but I have no information to tell me that's going to happen. The information I have tells me this, and this here, and this. That's the information I have. So that's why I hard target for 5. I hit 5, put money in the bank, sit and wait. I don't care if it goes 20 ticks, 50 ticks, 100 ticks. I don't care. Very specific. That's my sweet spot. In, out, done, and then relax. So you want to hear from traders that do it? Just ask. I used to, I specifically remember, I was struggling and I had a guy that I was recommended to by somebody else and said, you should try this guy's trade room. He seems to be legit and you know, up and on and on. And so I said to this guy, hey, would you mind if I talk to some of your other traders? And he was like, oh, no, they're very private. They don't want to talk to anybody else because, you know, it's about money and people are really funny about talking about their money and it's just too personal. So, no, I wouldn't ever. And I was like, oh, yeah, sure. Okay. Yeah, I get it. I understand. And then I'd never asked anybody ever again if I could talk to any of the other traders that have traded their trading system to see if it was any good, to see what they thought about it. Well, it wasn't until I got into this business that I realized what a load of crap that was, because happy people are always happy to talk about their good experiences. And they don't have to talk about money. They can just talk about their experience. So we have references, or come into our trade room, and ask. You know, there's a bunch of people that come to our trade room every day, that trade with us every day, some that have been coming for many years. You would think that if they were not having success, they would not keep coming back, but they do. So if you want a free week, just go to our website and you'll see the trade room up there and just click on this banner right here. You'll see this again. This is where I got it from. This is on our website. Just click on that, get a free trial, or there's the URL for it right there. All right. Now we've got a special offer going on, and it's a really good one. We've got 3 different offers that we're going to offer you, and you can see what's included as far as the indicators go. For the starter bundle, we've got the Obos First Touch, which are those support and resistance lines, our speed tick, and the flash, which is one of the divergence indicators. Plus, we're going to give you 1 month in the trade room, a mentoring session with me, and you can talk about anything you want. You can tell me about your past. You can tell me about what you've identified as your struggles or problems. You can tell me that you don't know what your problem is. And because I've been, number one, I've been in your position before, and I was a struggling trader for 7 years. and managed to find the way out. And I've also had the opportunity to listen to a lot of other traders and talk to a lot of other traders and help a lot of other people. Um, just feel free we can talk about anything you want. So we're going to do that for only $8.99. Okay. Now, next one is our pullback bundle. It includes all of the indicators we talked about today and some others. Going to give you a month in the trade room. We'll give you 2 mentoring sessions and then a free month of our VIP program. VIP program offers our, I told you we have programs for learning how to accelerate your learning here, and tools, and a program to help teach you how to learn and how to practice and really accelerate. We're not going to give you some information that we wouldn't otherwise give you about the trade setups. The information we're going to give you is about how to work at your trading. So that's part of our VIP program. And for a month, you're going to have access to that. You're also going to have access to that group mentoring that Eric was talking about in the chat yesterday in the trade room. That's called our AHA sessions. And you'll get that for a month as well, including some other tools that's in our VIP. So we're going to do that. We're going to cut the price down from that to only $19.99, and we're going to include the Rockstar. Okay? The Rockstar indicator is not included in the pullback bundle, but we're going to throw it in on this deal. Okay? Now, this is by far the most popular. People get started in some of the lower packages and then upgrade to the VIP. This is by far the most popular. Of course, it's the most expensive one. But you get all of that fast forward training I was talking about. Any future indicator we ever develop for the trade room, you'll get for free. Okay? For example, the Rockstar is new. We just released it a few weeks ago. All of our VIPs got that for free. They did not have to pay for it. I think it costs $5.50 or something like that. They got it for free. You get priority support and even remote support if you want our Praveen, our IT guy, to log onto your computer and help you get everything set up, or if you have problems, he can log in to your computer and help you get things straightened out. You get unlimited access to the trade room. You get our weekly group meetings, our daily trade room recordings like the one I just showed you is also available. And we'll do that for only $42.80. Okay? That also includes the new Rockstar, of course. So this all is going to expire next Wednesday at 10 p.m. A lot of people like to take advantage of the PayPal Bill Me Later. I'd say a large percentage of the people that use PayPal like to use their money instead of using your own money. A lot of people like to use the PayPal Bill Me Later. I don't know why not. It's free for 6 months, I think. Okay, that concludes my presentation. Now, yes, Perry, it was recorded, and since you're here, that means you registered, and anybody that registered is going to get an email with a link to the recording. If there are questions for me, please feel free. Hey, David, let me tell you a funny little story. Why Connor didn't answer emails yesterday. So Connor's real involved in all kinds of sports and activities, and he's kind of a badass. And so Thursday night he was rock climbing at a rock climbing gym, and there's this 50-foot wall that you climb up with a rope on, and it's called belay, or actually it's not top roping. It's I don't remember what it's called. So you climb up this wall, lead climbing. Yeah, you climb up this wall, and there's a guy on the ground that's supposed to be watching you with a rope, and if you fall, he grabs the rope, and you don't fall, right? So 47 and a half feet in the air, Connor jumps at a hold and didn't quite make it and began to fall and never stopped. And fell 47 feet onto his back. And fortunately, Connor is nothing but one big muscle, and I think that probably saved him. So the guy just didn't grab the rope. He was not paying attention. Those prices are until Wednesday of next week, Mark. See, the expiration expires Wednesday next week. Now, all of your oh, you mean for the license? No. For the licenses, and I need to put this on there, it's a one-time purchase. Once you purchased a license, you own it forever. And you get free upgrades forever. Anytime we upgrade the indicator or do bug fixes or whatever, they're always available to people that have a license. Any other questions? I hope you guys found what you were looking for. I asked you all what you came here for. And I hope I answered enough questions to make coming here worth your while. If I didn't, then one, I didn't do a good job, and two, you didn't ask enough questions. Because there's almost no way you can leave here not knowing or understanding what it is that we do. Oh, sorry. You know what? My chat thing quit scrolling. I will take, David, anywhere from 0 to 10 trades a day. On average, I'm going to be somewhere 3 to 4 to 5 trades a day. Yes, a contract is one lot. That is correct. One contract equals one lot. We just talk in contracts in futures trading. Do you live in Bermuda? Is that where you said you were? No, Bahamas. Do you live in Bahamas? Well, there are what's called margins. Bermuda, yes, nice. There are what's called margins in futures, and you're only allowed to trade depending on what the margin of the instrument is that you're trading. So I wouldn't put on 3 lots if you only had $2,500 in the account, because you're going to hit your margins real quickly, and they're going to shut you down. They're going to say, nope, we won't allow that trade, even though you have enough money in the account to place that trade. You don't have enough money to take losses, and that's the way that the exchange or the brokers protect themselves. So if it was me, I'd probably want to have close to 10,000 in there to trade 3 lots. That just gives you some cushion, some wiggle room. I am when I put on a trade mark, I put on a bracket order. If you don't know what a bracket order is, that means that when my trade is executed, I have a predefined target and a predefined stop. That predefined target is 5 ticks. My predefined stop is 7 ticks. Now, that being said, when I get into a trade and the conditions of the trade change, and they change such that I would never have gotten into that trade under these conditions, I begin to manage my stop by pulling it inwards towards my trade. I never make it bigger. I only make it smaller. So although I may get into a trade with a bracket order of a 5-tick target and a 7-tick stop, I may move that stop to something else, 4, 3, break even. Depends on the conditions of the trade, but I'll always shorten my stop. Yeah, Perry, if you're a VIP and you've gotten really good at trading our system, I will sponsor you in a Top Step Trader combine. Yeah, that's not true, Susan. Who told you that? Yes, you can and are encouraged to manage the trade. Because when we get into a trade, we don't have a crystal ball. We know what's most likely to happen based on history, based on the conditions. But that doesn't mean it's going to happen. It means it's likely to happen. So if it doesn't happen, well, we might want to change our mind. Now, I never just exit a trade, because then you have no opportunity for that trade to go back in your favor. I say never. Sometimes I have on occasion when you get these sudden and unexpected news events and things are just going crazy, I might just exit it, but that's once every few years. What would be the motivation to do what, Susan? I'm sorry, I didn't. To move my stop? Oh, for somebody to say that? Was it? I don't know who said it, so I can't imagine what their motivation was. Maybe he wasn't talking about futures. Maybe he was talking about stocks or Bitcoin or something. Forex. Well, that's even less. You can trade Forex with $10. I have no idea. I have no idea why he would say that. No, in my experience, yeah, you can trade Forex any amount you want. You can put any amount. Now in futures, you can't do that. Each lot has a specific amount. But in Forex, you can decide how much you're going to put on there. Yeah, 5,000 is good. I know many people open their trading accounts with much less. Now, There are some lines of reasoning on this. Um, you can fund a trading account just to get free data. And you can put in the minimum so that you don't have to pay the monthly fee to get data. And then when you're ready to start trading live, you increase the account size. That's what a lot of people do. I don't know. I don't know. I'm sorry. I just don't know. Um, yeah, I don't know where you're coming from, but people here generally will start with, I don't know, I hear 2,500 a lot. But here's the thing. That's not a lot. That's not much. And I said this in the beginning. Do not worry about how much money you have to have before you start trading until you know if you can be a consistent trader, until you've proven to yourself that you can grow the sim account inside your NinjaTrader. If you can't grow your sim account, do not place live trades. And under those conditions, you don't need to have money in a brokerage. That makes sense? I mean, I'm not going to pay the fee to enter a golf tournament unless I know I can hit the golf ball and I can hit it reasonably straight. Why would I do that? That would just be wasting my money. If you're trading before you can grow your sim account and you're trading with live money, you're just hoping. You start typing with your feet? Well, you're one of the few, Susan. Most people that have been in trading for any period of time have blown up accounts. I certainly blew up many. I'm using only NinjaTrader 8 now, Norman. We're only developing for NinjaTrader 8 this point forward. The Rockstar only works in NinjaTrader 8. They've got most of the major bugs ironed out. Yeah, we've got some really good female traders in our trade room. The markets are moving really good now, too. It's never a bad time to be practicing, Mark. Need to look at that, Max. I looked at it when it first started again, and used to really like to trade the TF. And I understand the RTY is getting some liquidity now, so gonna look at it. I just haven't. Alan had a good day yesterday. Yeah, we have some real good ones in the trade room every day. Alan's been practicing and he's relaxing some of his. Uh, Started out being very conservative, as being a little bit less conservative now because he's been practicing. He's getting better. So he had some good trades yesterday. Yeah, thanks. I agree. I agree. Every day. You know, I came up with this thing many years ago. And every day I look at it and go, wow. Wow. And you get to a point where we have these confluence of events and you just know. You just look at it and you go, well, yeah, price is going to do this because it almost always does. You know, we see this kind of stuff. Like we had nothing going on here, nothing to tell us anything was worth looking at, and then all of a sudden, this one bar, and then the open of this bar, this confluence of events, and look what price did. That's our sweet spot, right? I told you about the sweet spot. This yesterday. This is on the NQ. This is the ES. It did the same thing. I'll let you look at that. Any other questions? If I did not answer your questions, you can't leave. There is no extra fee for the NQ. It comes with the CME data. The NQ is one of the cheapest things to trade. I do, but I don't recommend it. But I will when I can, Mark. Sometimes, like yesterday, I don't know why, but I had my eyeballs on the GC, the gold, and I was watching it, and for some reason I quit scanning around, and I traded the GC. Everybody else traded the CL because it had a setup at the same time, and we all won, so it worked out. But there's one faster than mine. Sometimes you just get zoned in. I think the GC got oversold before the CL, and so my eyeballs went right to it. So what haven't I answered? What questions do you have? What's your gray area here? What's your concern? You haven't anybody have any concerns that I can address to help you with? Nuts or a bust? That's assuming that you don't manage your trade there, Max, and that's also assuming nuts or a bust. Is that right? Correct. Not so robust. Kind of corrected me. I don't know why my eyes didn't see that. Yeah, if you're going to do the math and make the assumption that all stops are hit, then you might figure out that it's not a lot of profit in it. But I rarely take a full stop, Max. Like I said, I put on the bracket order and then manage the stops. How many times will we need to break even membership with one contract? Membership with one contract. I'm not sure I understand, Mark. Oh, okay. So if you pay like for membership to join here, okay. So I have another question for you. So you're looking to break even as quickly as possible, right? For some reason, and I'm going to answer your question, Max. For some reason, many of us have these unrealistic expectations that this trading profession shouldn't require a lot of time, effort, energy, or money or experience. We come into this with that assumption and expectation because on the surface it looks very easy and all I need to know is when to pull the trigger, right? However, if you look at another profession, any other profession that has the ability to, or at least the potential to earn you the same income, you might have to spend 4 years and hundreds of thousands of dollars in college before you even get a job to begin making any money at all. But that's understood and expected, and everybody knows and understands that. Yet you want to know from me, if you invest $5,000 in our thing, how long is it going to take you to make money back? I don't know. If you want to be a doctor, how long is it going to take you to make your money back? Or a lawyer or an engineer or a software developer, how long is it going to take you to make your money back from the investment in your education? So it's a really hard question for me to answer. And I would never guarantee anything ever because I don't know you and I don't know how hard you're going to work at it. I don't know how serious you're going to take it. I know that you think you might be, inclined to work at it really hard, but I don't know what you're actually going to do. So I could never answer that for you. I understand, but what's your definition of hard worker and my definition of hard worker may be two different things. So I can't answer that. I can't answer how long it's going to take you. I can say that you'll start seeing success much more quickly than any other way. Okay, so Max, I don't want to lose you. So let me see if I can find something. Okay, well, this isn't a great example, but this is the one that's up here. Okay, so let's pretend that this is a terrible example. Let's see if I can find something else. Okay, there's one. Again, not a great example, but it's something that at least I can point to. Eee, that's ugly. What happened? Okay, so we have a bar here, we have a speed tick here. This is not a trade setup, by the way. This is something that I'm trying to use as an example, but let's pretend that something, okay? Let's pretend this is a speed tick Rockstar trade setup. So price goes up, and let's say it opens down here, and then we get our Rockstar down here, and I enter that trade right here to go short, okay? I know it opened up here, but we're pretending, right? So I enter this trade to go short, and I'm in this trade, and then on the open of the next bar, the trade opens up here above this support, this resistance line. Now, if my rules say that I've got to have resistance behind my trade to get into that trade, and the next bar opens above that line, well, I no longer have resistance behind my trade. So under those conditions, I never would have gotten into this trade. That's when I'm going to start managing my stop. Okay? So let's say I get into a trade, and I have to move this away from the projector or it'll do that draggy thing. And let's see if I can find another one. It seemed like something happened on the GC. If I can remember. Okay, yeah, here's one. Let's say, what? Come on. The projector's screwing this video up. Okay. So let's say, see how price dropped here? Nice kind of relatively straight drop. Exactly. So I have this nice drop here. And again, we're going to pretend. Let's pretend that I had a trade set up here and that I entered the trade. My expectation is that I want that to bounce, right? I want to see that good bounce that I keep showing you, where you have the indicators line up, you have this confluence of indicators, and price goes boink exactly like we want. But if it doesn't, and it starts doing this, channeling sideways, well, I never would have gotten into the trade under those conditions, right? This condition is long gone. Now I'm over here. Even though it's still on the right side of support, the price is moving sideways. Well, I don't trade when price is moving sideways. So I'm going to manage my trade to get out of that trade. So we have a lot of opportunity to exit trades before we just sit there and let it hit the stop. If conditions change that got us into the trade, I'm getting out of that trade. So that's a couple of examples. No, never. And now you could. That's me. But again, remember I mentioned the sweet spot, and my expectation is the trend is going to continue. My expectation is price is going to do this. Boink, 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 boink. And so I'm just taking advantage of these little spots here. So if my expectation is this little pullback and then it continues on its way on the trend, why would I put on runners and trailing stops? Now, that's me. I'm not saying you couldn't do it, but you certainly could, you could certainly try if you wanted to. It's just from my experience and my expectation. And I want to get out. I don't want my money in the market. I want to get my profit and get out. I don't assume multiple small pullbacks. That is not true. I know there will be multiple small pullbacks. I know for sure. There's very few things you know for sure about the markets and about trading. I'm positive every trend is going to pull back before it continues. No doubt. Every trend does. I don't trade the ES. It's in the trade room, but I don't trade the ES because it's such a fat, slow cow. NQ, how long? Anywhere from a few seconds to maybe 3 minutes. Depends on how fast price moves, but generally, I mean, if I'm in anything 3 minutes or longer, I just feels like forever. Yeah, it's interesting. We have the ES in our trade room, and we have it there for one reason only. It's in there because there's a lot of people that think that the ES is the place to be because that's what they've read on trading forums, and there's so many people out there with so much information about the E-mini, and trading the E-mini, and there's just a whole wealth of information out there because it was the first mini out there. And so a lot of people, a lot of us retail traders started with the ES. I did, and so there's just a wealth of information out there, and of course other companies come out and they just keep regurgitating the same old thing. But the and so a lot of people think that's what they want to or need to be trading. So we put it in the trade room simply to entice them to come to our trade room and see what else is available. So they may be focused on the ES while they're watching us just kill it on all the other markets. All five of the other instruments. We trade all these. We had a good day on all of them yesterday. This is the 6E or the Euro futures contract. This one is the YM, the Dow Mini. This is CL, oil. This is GC or gold. And this is NQ or the NASDAQ. This is the ES. So I trade them all. Oh, I used to trade the Russell too. And now it's back. It's the RTY instead of the TF. And I will look at it. I used to really like that. Not sure what I'd take off here though. We used to trade 8 charts instead of 6. I could do that, but not sure I want to. Well, let's get started, Mark. We'll see you in the trade room next week, and Connor will get you all hooked up. Yeah, it was in the middle, right? Used to be right here. TF was right here. Yeah, we killed on the TF. Excellent. All right, so you got the link to the specials page. Connor, can you post that again real quick? Oh, did Connor leave? I bet he passed out. Doggone it. Have to do everything around here. Oh, that's not the right one. I was going to get you the link again here. The heck? Well, my chat quit working. All right, Mark. Well, thanks for coming. Anybody else have any questions? We've been at this almost a couple hours. And some good questions. You can also join us in the trade room if you want to. You're welcome. Welcome back. Thank you very much. All right, everybody, have a great rest of your weekend. Um, Thanks, Peter. The trade room is closed on Monday for President's Day. So we'll be back at it on Tuesday. So everybody have a nice long weekend. And we'll hopefully see you all in the trade room on Tuesday. Bye now.